The US Central Bank cut interest rates. Here's 20 years of investing experience with what all this means to you in about a minute. So the Fed, the US Central Bank, basically Santa, delivered early Christmas presents, a third interest rate cut. Plus they're going to be buying bonds, $40 billion of purchases a month. This basically means they're going to be pumping money into the US economy, and historically this is fuel for the stock market and gold. On average, after the first interest rate cut, we see the S&P 500 gain about 11% over 12 months, but we see US small caps do even better than that, rising 5% more than the S&P 500. Gold generally does really well too. It's rallied about 31 to 36% over 2 years after the first interest rate cut in the US. But over the last 3 interest rate cut cycles in the US, we've seen gold gain a whopping 99%. From a low to a new peak. Now, this is all what's happened throughout history. Of course, history never repeats itself, but it usually rhymes, as Mark Twain said. So this basically suggests we could have a very strong year ahead for the S&P 500, the Russell 2000, and the companies who earn most of their money from the US. And fourthly, gold stocks and ETFs could also have a stellar year.